If you spent your career as a teacher, a firefighter, a police officer, a postal worker, a state or county employee, or any other form of public servant, and you are currently receiving Social Security benefits, or you were told at any point that your Social Security benefit would be reduced or eliminated because of your government pension, I need you to watch this complete video before you do anything else today, because the United States Congress has passed a law that directly reverses those reductions. The Social Security Administration is actively processing retroactive payments right now. And the single reason most eligible people will never receive the money they are owed is that they will not submit the correct documentation before the processing window closes. I want to be completely transparent with you from the first moment of this video. What changed is not a proposal. It is not something still working its way through Congress. The Social Security Fairness Act was signed into law. It eliminated two of the most penalizing provisions ever written into the Social Security system, the Windfall Elimination Provision and the Government Pension Offset, and SSA has been directed to recalculate benefits and issue retroactive payments to every eligible person whose benefit was reduced under either of those two rules. But here is where the problem arises. SSA is not sending those payments automatically to everyone who qualifies. The agency is processing claims in waves, prioritizing people whose records are already complete and whose documentation is already on file. If your record has any gap, any outdated information, any missing form, or any unresolved flag, your retroactive payment is sitting in a queue that will not move until you take action to clear it. The average retroactive payment for people affected by WEP and GPO is $6,200. That is a single lump sum check representing back pay for the month since the law took effect. On top of that, eligible recipients are seeing ongoing monthly benefit increases of between $360 and $800 per month, permanently for the rest of their lives. That is not a small adjustment. For a retired teacher living on a fixed pension and a reduced Social Security check, an additional $500 per month is $6,000 per year. Over a 10-year retirement, that is $60,000 in income that was being withheld under a rule that no longer exists. Stay with me through the end of this video. The final section covers the most time-sensitive information, the exact form you need, the exact phone number to call, and the exact deadline that determines whether your retroactive payment is processed in the current cycle or pushed back by months. Do not leave before the end. I want to start by making sure every person watching this video fully understands what WEP and GPO were, why they existed, and why their elimination is one of the most significant Social Security changes in the last 40 years. Because if you do not understand what these provisions did to your benefit, you will not understand why the correction matters or how large the payment owed to you actually is. The Windfall Elimination Provision and WEP was a rule that reduced the Social Security retirement benefit of anyone who also received a pension from a job not covered by Social Security. In practical terms, this primarily affected teachers in states where the public school system operated its own pension fund outside of Social Security. States like California, Texas, Illinois, Massachusetts, Ohio, Colorado, Louisiana, and several others. It also affected federal employees hired before 1984 who were covered under the civil service retirement system rather than Social Security, as well as many state and local government workers, transit employees, and certain utility workers whose employers did not withhold Social Security payroll taxes. The way WEP worked was this. Social Security calculates your retirement benefit using a formula that replaces a higher percentage of earnings for lower-income workers than for higher-income workers. This formula is designed to protect people who spent their careers in low-wage jobs. WEP modified that formula specifically for people with pension income from non-covered employment, treating them as if they were higher-income earners even when they were not. The result was a reduction in monthly Social Security benefits that could be as high as $587 per month in recent years. For someone who worked a second job covered by Social Security for 20 or 30 years in addition to their government career, that reduction was applied even though they had legitimately earned Social Security credits through decades of covered work. The Government Pension Offset, GPO, was a separate but related provision that targeted spousal and survivor benefits specifically. Under GPO, if you received a government pension from a job not covered by Social Security, your Social Security spousal benefit or survivor benefit was reduced by 2/3 of your pension amount. In many cases, that reduction was large enough to eliminate the spousal or survivor benefit entirely. A retired teacher in California receiving a Cal STRS pension of $3,000 per month would have had her Social Security survivor benefit, the benefit she was entitled to based on her deceased spouse's earnings record, reduced by $2,000, which in many cases left her with $0 in Social Security survivor income, despite the fact that her spouse had paid into the system for an entire career. These two provisions affected approximately 3.2 million Americans at the time of their repeal. They were controversial from the moment they were introduced, widely regarded as penalizing public servants for choosing careers in government service, and the subject of legislative repeal efforts for more than 2 decades before the Social Security Fairness Act finally passed and was signed into law. I want to be completely transparent about what this means for the people watching this video. If you were a public school teacher, a firefighter, a police officer, a state or municipal employee, a federal employee under the civil service retirement system, or a spouse or widow of any of those individuals, there is a meaningful probability that money is owed to you right now, that SSA has already begun the process of calculating what that amount is, and that the only thing standing between you and receiving it is whether your SSA record is complete, current, and flagged for active processing. I want to now address 3 specific groups in detail because the situation is different for each one, and the action you need to take depends entirely on which group describes your circumstances. The first group is retired public employees who were subject to WEP and are currently receiving a reduced Social Security retirement benefit. If you fall into this group, you spent part of your career in a job covered by Social Security, meaning your employer withheld Social Security payroll taxes from your paychecks, and you also spent part of your career in a government job where Social Security taxes were not withheld. You applied for Social Security retirement benefits, and when your benefit was calculated, SSA applied the WEP formula and reduced your monthly payment. You have been receiving that reduced amount ever since. Here is exactly what is happening to your benefit right now under the Social Security Fairness Act. SSA is required to recalculate your benefit using the standard formula, the same formula that would have been applied if WEP had never existed. The difference between your current monthly payment and the amount you would have received without WEP is the monthly increase you are owed going forward. The sum of that difference multiplied by the number of months since the law's effective date is your retroactive lump sum payment. For a person whose benefit was reduced by $400 per month under WEP, the ongoing monthly correction is $400. If 12 months have elapsed since the law took effect, the retroactive payment is $4,800. If 18 months have elapsed, the retroactive amount is $7,200. These are not trivial sums, and they belong to you. But SSA cannot finalize your corrected benefit amount and issue your retroactive payment without a complete and current record on file for your account. Here is where the processing delay is occurring for a large number of people in this group. When SSA recalculates a WEP-affected benefit, the agency must verify your earnings record, specifically the years in which you worked in Social Security-covered employment, against the pension records from your non-covered government employer. If there is any discrepancy between what SSA has on file for your covered earnings and what your actual work history shows, the recalculation is flagged and held for manual review. That manual review does not happen automatically on a set timeline. It happens when the affected beneficiary contacts SSA and provides the documentation needed to resolve the discrepancy. The documentation SSA most commonly needs from people in this group includes a current copy of your government pension award letter showing your monthly pension amount and the name of the pension system paying it, a complete earnings history showing all years of Social Security covered employment, and in some cases a copy of your most recent tax return showing pension income. If you have moved, changed your banking information, or updated any personal information since you originally filed for Social Security, that information also needs to be current in your record before SSA will release a payment. Your action if you are in this first group is the following. Call the Social Security Administration at 1-800-77-21213 and tell the representative that you are calling about your WEP correction under the Social Security Fairness Act. Ask them to confirm that your record has been flagged for active processing and that there are no outstanding documentation requests holding your recalculation. If the representative identifies any outstanding item, ask them to tell you exactly what is needed and in what format, and then submit that documentation as quickly as possible. Do not assume SSA will mail you a notice about a missing document before acting on your file. In many cases, they will not. You need to proactively verify your record status by calling directly. You can also check your benefit status and earnings record by logging into your My Social Security account at ssa.gov/myaccount. If you have not created an account, do so today. Your earnings record is the foundation of your WEP recalculation, and you need to verify that every year of covered employment appears on that record with the correct earnings amount. If any year is missing or shows an incorrect earnings figure, that error will reduce your corrected benefit amount, and you will need to file a formal earnings correction request before your recalculation can be completed accurately. The second group I want to address is widows, widowers, and surviving spouses of public employees whose Social Security survivor benefit was reduced or eliminated under the government pension offset. If you are in this group, your situation is in some ways more urgent than the first groups, because GPO reductions were in many cases total, meaning your survivor benefit was reduced to zero. And the retroactive payment owed to you may be larger than the average, because you have been receiving nothing from Social Security for months or years while this law was pending. Let me explain how GPO affected survivor benefits specifically, because I want every person in this group to understand the full scope of what they are owed. When a Social Security-covered worker dies, their surviving spouse is entitled to receive a survivor benefit equal to 100% of what the deceased worker was receiving, or would have received, at full retirement age. This is one of the most valuable protections in the Social Security system, and it is the primary source of income security for millions of widows and widowers in this country. Under the government pension offset, however, if the surviving spouse received a pension from a government job not covered by Social Security, that survivor benefit was reduced by 2/3 of the pension amount. Here is what that looked like in practice. A woman who spent 30 years as a public school teacher in Illinois, retiring with a teacher's retirement system pension of $3,600 per month, and whose husband worked in the private sector and paid into Social Security for 40 years, would have had her survivor benefit calculated as follows. Her husband's Social Security benefit at full retirement age was $2,100 per month. She was entitled to 100% of that as a survivor benefit, $2,100 per month. But 2/3 of her pension, $2,400, exceeded her survivor benefit. Under GPO, her survivor benefit was reduced by $2,400, leaving her with a survivor benefit of -$300, which SSA rounds to zero. She received nothing. Her husband paid into Social Security for 40 years. She received $0 in survivor income from that record. Under the Social Security Fairness Act, GPO no longer applies. That surviving spouse is now entitled to her full $2,100 per month in survivor benefits, and she is entitled to retroactive payment for every month since the law's effective date during which she received $0 instead of $2,100. That retroactive sum, depending on how many months have elapsed, could be between $8,000 and $15,000 or more. A single lump sum payment representing the survivor income that was withheld from her under a rule that has now been abolished. Here is where the problem arises for people in this second group. Because many GPO-affected survivors were receiving $0 in Social Security survivor benefits, SSA does not have an active payment file for them in the same way it does for people receiving reduced benefits. In some cases, the surviving spouse never completed a formal application for survivor benefits because they were told at the time of their spouse's death that GPO would eliminate the benefit entirely, and they saw no point in filing paperwork for a $0 benefit. If you are in that situation, if you never filed a formal application for survivor benefits because you were told GPO would eliminate them, you must file that application now in order to receive any retroactive payment or any ongoing monthly benefit. This is the single most important action item in this entire video for people in this group. If you never formally applied for a Social Security survivor benefit because you were told GPO would leave you with nothing, you must apply now. You cannot receive retroactive payment for months prior to your application date unless SSA has a formal claim on file. Every month you delay your application as a month of retroactive payment, you may permanently forfeit. Call 1-800-772-1213 immediately and tell the representative that you are a surviving spouse of a Social Security covered worker, that you did not previously file for survivor benefits due to GPO, and that you are now filing under the Social Security Fairness Act. The representative will walk you through the application process. You can also begin the application process online at ssa.gov. Have the following information ready: your deceased spouse's Social Security number, the date of their death, your own Social Security number, your government pension award letter, and proof of your marriage, such as a marriage certificate. If you previously filed for survivor benefits and were receiving a GPO reduced amount, including a reduced amount that was greater than $0, your situation is different. SSA already has an active file for you and is processing your recalculation as part of the standard WEP/GPO correction wave. Your action in that case is the same as the first group. Call 1-800-772-1213, confirm your record is flagged for active processing, and verify that no outstanding documentation is holding your case. I want to say this clearly for every widow and widower watching right now. The money owed to you under the elimination of GPO is not a benefit increase. It is a correction. It is income that was legally yours, that the Social Security system withheld from you under a provision that has now been repealed. You are not asking for charity. You are not applying for something new. You are collecting what the law now says you were always entitled to. Do not let embarrassment, confusion, or uncertainty about the process stop you from making that phone call today. Share this video right now with every retired teacher, retired firefighter, retired police officer, and retired government worker. Share it with their spouses. Share it with the adult children of public servants who may be managing a parent's finances. The people most affected by WEP and GPO are often the people least likely to have heard that the law has changed because they spent their careers in classrooms and firehouses and precinct houses, not monitoring congressional legislation. They are depending on someone in their circle to bring this information to them. You can be that person. Send them this video right now before you continue watching. If this channel has helped you today, please subscribe using the button below this video. We cover Social Security updates, Medicare changes, IRS rules for seniors, and benefit corrections every single week. The rules are changing faster in 2026 than at any point in decades, and the people who protect their income are the ones who stay informed. Subscribe now. The third group I want to address is people who are not yet receiving Social Security benefits, but who worked in non-covered government employment and are now approaching their filing date, or who previously decided not to file for Social Security benefits at all because they were told that WEP or GPO would make their benefit too small to be worth the administrative process of applying. If you are in this group, the repeal of WEP and GPO changes your situation completely, and I want to make sure you understand the full scope of that change before you make any filing decision. Under the prior rules, a person who worked 30 years as a teacher in a state without Social Security coverage and who also worked 10 years in a Social Security covered job during summers, part-time, or in a second career might have calculated their estimated Social Security retirement benefit, seen that WEP would reduce it by $400 or $500 per month, and decided the benefit was too small relative to the complexity of filing. That calculation is now completely different. WEP no longer applies. The benefit you would receive is calculated using the standard formula applied to your actual Social Security covered earnings, with no reduction for your pension. For many people in this situation, the monthly benefit that seemed not worth filing for has now become a meaningful and permanent source of additional retirement income. Here is where the problem arises for this group. If you have never filed for Social Security benefits and you are past your full retirement age, you are leaving money on the table every month that passes without a filed claim. Social Security retirement benefits do not pay retroactively beyond 6 months for most filing situations, meaning that if you delay your application by 12 months past your full retirement age, you forfeit approximately 6 months of benefits permanently. At a benefit of $800 per month, which is a realistic amount for someone with 10 to 15 years of covered earnings, a 12-month delay costs you $4,800 in permanently lost income. Additionally, if you are between age 62 and your full retirement age and were previously dissuaded from filing because of WEP, you now need to recalculate whether filing sooner versus waiting produces better lifetime income given your specific situation, because the calculation has changed. The SSA's retirement estimator at ssa.gov/estimator will show you your projected benefit at different filing ages based on your actual earnings record. Use that tool, run the numbers, and then call 1-800-7721-213 to speak with a benefit specialist before you make a final filing decision. There is one additional consideration for people in this third group who are married or widowed. If you qualify for both a Social Security retirement benefit based on your own earnings and a spousal or survivor benefit based on your spouse's earnings, the elimination of GPO may have changed which benefit is larger and which filing strategy maximizes your household income. Under GPO, your spousal or survivor benefit was reduced by 2/3 of your pension, often to zero. Without GPO, your spousal or survivor benefit is calculated in full, and it may now be larger than your own retirement benefit. SSA does not pay both simultaneously. You receive whichever is higher. But determining which is higher now requires a complete recalculation that accounts for the removal of GPO, and that recalculation should happen before you file, not after. Call 1-800-7721-213 and tell the representative you are evaluating your filing options as a government pension recipient following the repeal of WEP and GPO, and that you want to understand both your retirement benefit and your spousal or survivor benefit before making a filing decision. That is a conversation SSA is required to have with you, and it may be one of the most financially significant conversations you have in 2026. I want to now bring everything together for all three groups because the action steps and the timelines are slightly different for each one, and I want every person watching to leave this video knowing exactly what to do before they close it. If you are a retired public employee who is currently receiving a WEP-reduced Social Security retirement benefit, your action is this. Call 1-800-7721-213 today and confirm that your record is flagged for active WEP correction processing under the Social Security Fairness Act. Verify that SSA has a current copy of your government pension award letter on file. Log in to ssa.gov/myaccount and confirm that your earnings record accurately reflects all years of Social Security covered employment. If any year is missing or incorrect, file an earnings correction request immediately. Your retroactive payment averages $6,200, and your ongoing monthly increase averages between $360 and $800. Neither will be released until your record is complete and your recalculation is finalized. If you are a surviving spouse whose survivor benefit was reduced or eliminated under GPO, your action depends on whether you previously filed. If you never filed because GPO left you with a $0 benefit, file your survivor benefit application immediately by calling 1-800-7721-213 or visiting ssa.gov. Every month you delay is a month of retroactive payment you may not be able to recover. If you previously filed and were receiving a reduced survivor benefit, Call 1-800-772-1213 and confirm your record is in the active processing queue for GPO correction. Have your government pension award letter available during that call. If you have never filed for Social Security benefits and were previously discouraged by WEP or GPO, your action is this. Log in to ssa.gov/estimator and run your benefit projection using your actual earnings record without the WEP reduction that no longer applies. Then call 1-800-772-1213 to discuss your filing options with a benefit specialist before you submit any application, particularly if you are also eligible for a spousal or survivor benefit that may now be larger than your own retirement benefit following the removal of GPO. Write down these contacts right now. The SSA direct line is 1-800-772-1213, available Monday through Friday, 8 a.m. to 7 p.m. Eastern. Wait times are shorter before 10 a.m. and after 4 p.m. Your personal benefit record is at ssa.gov/myaccount. Your benefit projection tool is at ssa.gov/estimator. Your local SSA office address for written submissions is at ssa.gov/locator. If you submit any documentation by mail, use certified mail with return receipt, keep a copy of everything, and note the date SSA receives your submission. That date is your documentation that you acted within the processing window. Before you close this video, I am going to ask you to do something that costs you nothing and could mean thousands of dollars to someone you care about. Share this video with every retired public employee in your life. Share it with retired teachers. Share it with former firefighters and police officers. Share it with the widows and widowers of government workers. Share it with anyone whose Social Security benefit was ever described to them as reduced because of a pension. Those people may not know the law has changed. They may not know a check is being processed that has their name on it. They may not know that the form they never filed because the benefit seemed worthless is now the form standing between them and $6,200 in retroactive income. You watched this video, you now know. Share it before you close it. Subscribe to this channel using the button below this video if you have not already. We cover Social Security rule changes, Medicare updates, IRS deadlines for seniors, and benefit corrections every single week. The pace of change in retirement income law in 2026 is faster than at any point in the last 30 years. The people who protect their checks are the people who stay informed. Subscribe now so you are never the last to know. The phone number one final time is 1-800-772-1213. The website is ssa.gov. If you were affected by WEP or GPO at any point in your retirement, whether you are currently receiving a reduced benefit, receiving nothing because GPO eliminated your survivor payment, or never filed because the reduction made it seem pointless, your situation has changed. The law has changed. The money is there. The only question is whether you take the steps to claim it before the processing window moves past your file and onto the next one. Do not wait. Do not assume SSA will call you. Do not assume the check is already on its way without any action on your part. Call today. Verify your record today. File if you have not filed. Correct your earnings record if it is incomplete. The window is open right now. Act while it is.